Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, I'm sure many of you saw this news in the mainstream, and that is 16 billion login credentials were leaked in the world's largest data breach, affecting Apple, Google, Facebook, Telegram, and more. Obviously not good. This is a problem we've been dealing with for many years. Many companies have had data breaches, but you know what the solution is? Blockchain. These companies need to build on the blockchain infrastructure so that these type of data breaches don't continue. Because now that you have AI coming into the mix, it's going to be easier to hack companies and steal data, right? It's going to get worse. But the way to police all of this, the way to fix all of this is blockchain. But the problem is we need Congress to get legislation out there so these companies feel comfortable with building on the blockchain technology. And of course, there's a learning curve. It's going to take time for them to understand how to build with it, how to integrate it into their systems. But blockchain is a solution. So remember what I'm telling you here, because I believe the solution will come very soon as people realize we need to move to Web3. We need to build on the blockchain and put data on the blockchain. And in addition to that, one of the great benefits of Web3 and blockchain is that you get to own your data. I believe in the future, you will be able to control your information, your data, and sell it out to advertisers if you want, monetize it. But essentially, all of it will be encrypted. And this also plays into where things are headed in a more digital world with digital identity and much more. So the solution is there. The problem is to get all these companies on board. Now, I know some of you are going to say, hey, Telegram, they use blockchain. Yes, but they're not encrypting login data and so forth on the blockchain. And that's the problem. And that's because the consumers have not been trained. The proper wallet setup is not there. So the infrastructure has to be built. But the solution is there. We just got to fine tune it, folks. But it really sucks that this is happening. Now, former Binance CEO and, of course, the founder of Binance, he tweeted out about this news saying that's 2 passwords per person for the planet. Use a different password for each site and hopefully a different email address too, and use a hardware 2-factor authentication device. So just some security tips, but the ultimate solution is blockchain, and that's where we have to get to. Now, folks, I know many of you are patiently waiting for Bitcoin and altcoins to rally again, and they will. We just got to go through the market cycles. But what's interesting, Bitcoin ETFs are seeing some ongoing inflows despite all the macro uncertainty with war and so forth. And here, Eric Balchunas, ETF analyst, he tweeted out risk on Orama. Despite the threat of war and ongoing media negativity, ETFs took in $68 billion in the past 5 days. That's $11 billion a day, about 3x the average. And all the top 10 are equity ETFs with the exception of IBIT. Further, at 523 billion, ETFs on pace to break last year's record. Damn, he says. Now notice BlackRock's Bitcoin ETF IBIT was a part of that. But the stock market ETFs are seeing inflows as well. So what does this mean? I think people recognize that, look, we may be coming to the end of the consolidation, and then we're going to see some upside. If not in the short term, definitely in the long term, as far as this year, it's just a matter of the market cycle. So this is a good sign, folks, that we're seeing this type of inflows for these ETFs. Now, this is interesting news. Trump's family company cuts stake in World Liberty Financial by 20%. An umbrella company controlled by the president and his family has reportedly been reducing its stake in World Liberty Financial since December 2024. So according to a Thursday Forbes report, DT Marks DeFi LLC, an umbrella company controlled by Trump and his family, has been slowly reducing its stake in World Liberty Financial. The report noted that DT Marks DeFi LLC had a 75% stake in World Liberty Financial as of December 2024, but World Liberty's website said the company owned approximately 60% as of January, a stake that was further reduced to 40% sometime after June. So let's break it down. On one hand, there is some profit taking here, coming out of the Q4 rally. But the other part of this, I think Donald Trump and his family are reducing some of their crypto holdings because some members of Congress are pushing back, saying there's a conflict of interest here because he's pushing for legislation. They're trying to get market structure legislation to the House. So I think this is good. This may be a compromise for them to reduce their stake in these crypto companies. I've often said I don't necessarily have a problem with his kids getting involved with crypto, but I do have a problem with the meme coin. But if a lot of the revenue is going to Trump himself, then I think he needs to reduce his exposure. I'm not saying he needs to dump all his crypto and all that, but this may be the compromise because, as mentioned, some folks in Congress are like, "Hey, we're not going to sign these bills. We're not going to get them through because of the conflicts of interest." So let's see how this plays out. But that's personally what I think is happening. Some profit taking, I think, in December, but as of recently, I think it's more so reducing their holdings to find a common ground to get crypto legislation through. Now, I'm not sure how many of you have been paying attention, but Circle's stock price has been rallying. So since the IPO, it has been going nuts. And usually you have kind of a massive surge, any company that goes public, and then a big dump, right? Because it's not sustainable. But what's giving Circle the momentum is stablecoin bill, that narrative, that being pushed through the Senate is such a huge issue. It's driving a lot of demand for Circle stock as well as bullish sentiment around the stock. So the stock has been surging. So if you bought some, congratulations. It closed Wednesday at $199.59 and with a high of $211.87. Now, the stock is up over 540% since its June 5th debut. So you do want to be careful because I've often said you don't want to jump into pumps and green candles because it could easily roll over at any point and you get wrecked. Now, if you have a long-term view and you don't necessarily need the money, then it could work out for you in the long term. But I haven't bought any, and I do plan to buy, but I'm waiting for that big correction, right? Because I don't want to buy the green candles and I want to get as much upside as possible. So if something has moved up, 540%, how much more can it go up before seeing some sort of correction? And obviously you got to look at the charts as well to look at the different metrics like RSI, MACD, and much more. Now, speaking of stable coins, Visa Yellow Card pushed digital dollar use across African countries. Yellow Card plans to roll out stablecoin payments with Visa in at least one African country this year amid a trend driven partly by limited access to US dollars. So this in part is why the US has such a level of urgency as it relates to stablecoin legislation, because it will help the world adopt US dollar backed stablecoins. It will allow issuers like banks and much more to push their stablecoins out, get consumers and people around the globe to use it. And that will, of course, benefit the US dollar because the regulations will mandate that the issuers must have US treasuries backing their reserves. So you see what's happening here, and look at the big name Visa. So all the credit card companies, the payment companies are getting involved. We've often talked about PayPal and their stablecoin PYUSD. Well, Visa, MasterCard, and others, they don't want to get disrupted. So they are integrating stablecoin payments and making a push. Visa itself has integrated USDC. It's pretty amazing what's happening. Now, folks, quick word from our sponsor, and that is Trezor. Trezor makes beautiful hardware wallets that makes it easy for you to safely custody your crypto. I'm a big believer in self-custody. Many of you know I've been using hardware wallets for years. Trezor were the ones who created hardware wallets. They started doing this in 2013. They created the whole seed phrase setup and much more. I'm a user of the Trezor Safe 5 and all of Trezor's hardware wallets are open source and they support a variety of coins. I'm talking Bitcoin, XRP, Solana, Ethereum, and much more, even new tokens. And they have a great software called Trezor Suite, which makes it easy for you to manage your tokens. And folks, they have an onboarding service where you can talk to a Trezor rep who can hold your hand and help you set up your device and much more. So I'm a user of the Trezor Safe 5 device, and it's a beautiful device and easy to use. And guys, you can also get 5% off your purchase if you use the code Thinking Crypto, all one word, Thinking Crypto. So check out Trezor, link will be in the description. Now, folks, look at this. XBTO, Arab Bank Switzerland, launch BTC yield product for institutional clients. The partnership is part of a broader trend of banks integrating structured Bitcoin yield products into wealth management services. Folks, what have I been saying for years? They're going to financialize Bitcoin in this asset class. They're going to create all types of financial products. And of course, institutional investors want yield. So you're seeing a lot of these banks and institutions get creative in creating yield. Now, Bitcoin, it's a bit difficult. Now, with proof of stake tokens, such as your Ethereum, your Solanas, and so forth, AVAX, there's a staking component and it's easier to get yield there. But with Bitcoin, they're going to have to get creative. So we are just seeing globally, folks, the adoption, new things being created, and it's the legacy institutions coming in to do this. It's not even crypto native firms anymore. You got banks and stock exchanges and much more. So let me give you some more details. XBTO, a crypto investment firm and liquidity provider, has partnered with Arab Bank Switzerland to provide a Bitcoin yield product to the bank's wealth management clients, part of a growing appetite among institutions for Bitcoin yield products. According to XBTO, the product will apply its diamond hand strategy, a proprietary approach used on the company's Bitcoin yield fund. The fund rules strategy involves selling Bitcoin options to earn premiums while seeking accumulation during the market dips. Regulated in Bermuda, the product has reported annualized returns of around 5% with relatively low volatility. Incredible what's happening. And as always, as I always tell you guys, it will start with Bitcoin. Then it'll go to altcoins, ETH, XRP, Solana. We're seeing that with the ETFs. We're seeing that with the corporate treasury, and all the yield products will be built out for these other assets, folks. It's pretty exciting. And speaking of yield, we got a report here that BlackRock's BUIDL, their tokenized fund, apparently it's going to be used as collateral for a market fund. So Deribit, which was recently acquired by Coinbase, and Crypto.com to allow institutions to post BlackRock's tokenized money market fund as collateral. So you see what's happening here, folks. It's the financialization of this asset class. Pretty amazing. Now, final news item, X, which is, of course, headed up by Elon Musk. They're going to offer investments and trading soon. And here's what their CEO, Linda Yaccarino, said. Soon, you're going to be able to live your whole financial life on the platform. And we've seen Elon in the past talk about he wants to make X the WeChat of the Western world, right? And we know he knows about crypto. He knows about blockchain, obviously. So he's obviously going to integrate stablecoin payments and definitely the ability to trade crypto in addition to stocks and other assets. So I'm really excited to see this because I use X a lot and I'm curious to see how this unfolds. And it's going to be a lot of competition between X, Robinhood, and all the crypto exchanges. Things are going to heat up, but more on and off ramps being created for crypto. And obviously he's going to offer other investments, but we know Elon, he's going to integrate Doge in some way and Bitcoin and much more. So I'm really excited to see how this plays out and how they decide to do it. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. A great way you can support me in the podcast is by subscribing to my free email newsletter. It's 100% free. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. Thank you so much for watching and listening. I appreciate you all, and I'll talk to you all later.